When you listen to Chrystia Freeland talk, you really want to understand what is she talking about. And what she's talking about is, where does the money come from?
Pierre Poilievre says this is a tax on farmers, a tax on doctors. It's going to make life more expensive and it's going to kill jobs. How do you push back against that?
Right now, we have a tax system that is tilted to give an advantage to people who are getting investment income. For someone like a teacher, someone like an electrician, whose main income, whose only income is from a salary, they pay tax on 100% of their salary. Someone who is getting their income through investments, currently only 50% of their investment is taxed.
She's really trying to point out that, hey, people that make more money can afford to give back more money, is what she's trying to say. But she uses the word investment. People that have investment income should pay more. And that sounds great, except that when you take away the incentives from someone who makes an investment into businesses, into real estate that houses people, that creates homes, when you take away incentives for those investments, they're going to want to go and make investments in places where they have the opportunity to make more. So really, what she's saying is that this capital gains tax is a tax on investments, on investing, and that will drive away the dollars that would go into investing, that would create more jobs, more businesses that can provide goods and services.
So let's imagine you're a great investor, David. I hope you are.
But a lot of that would be after-tax income.
Let's imagine you make a great investment, and let's imagine that before our changes, you earn $2 million in your investment. Right now, 1 million of it you just put to the side, and it doesn't even touch the tax system. A nurse can't do that with her salary. That's not fair. And so we're changing it, and we're saying from June 25th, 2/3 of investment income of your capital gain above $250,000 a year is now going to be taxed.
Where does it come from? It comes from people that are investing. It's coming from the mom and pop that have second properties. If you've got a cottage and you sell that cottage, great. The first $250,000 you might be good on. And then after that, you're getting taxed at a higher rate. Well, how many cottages have you seen for $250,000? Look, this Robin Hood idea is unrealistic. We already have the ultra rich in the country already get taxed higher and pay more taxes than most people in the country. For that matter, combined, they pay more. What's interesting to consider in this is that all of these people, all these politicians, just had their own incomes go up. They voted for themselves to make more money. Well, instead of making Canadians pay more, why not avoid raising all of your own payroll, your own salaries, considering that most politicians are making more? Not most, all politicians are making more than the average Canadian. And so here we are stuck in a situation where they would have us believe that we need to be Robin Hood, that they need to be Robin Hood, and they need to go take more from the rich to help the poor. And I say, well, how about taking it from yourselves rather than taking it from the people that you're going to call rich? Because a lot of these people that they're calling rich are not, in fact, rich. They're the mom and pop that have bought income properties 30 years ago and are looking to sell them now. And they're going to have to pay higher taxes because of this government spending. And what's interesting, and this is not really a liberal question or a conservative question. This is a leadership question. The leadership that we have in place today is saying that it is better for us to steal from whoever we can target, is literally what they're talking about. If we think that more people will say, yeah, let's blame the people that are investing in Canada. Let's blame the people that are landlords and investors and making all this money, when in fact, they're really coming after anyone that's gotten ahead in the middle class, people that are instead making money there. Because look, really rich people are going to move their money offshore. They're going to move it to other places. They're going to put it into tax havens. They're going to find ways to work within the tax code. So at the end of the day, you're really going to be going after the people that are below that category, the people that don't have the corporate firms, law firms and accountant agencies that are able to move all of that money around. Those people aren't going to get taxed at that level. You know it, and I know it. They've already worked within the tax structure so that they can protect as much as possible. That's why the people that are worried are the doctors, are the farmers, are the business owners that don't have those legal teams, don't have those accounting firms to be able to show them how to be able to move their money into places, how to move corporations offshore so that they pay less taxes. You and I, if we don't have those firms, those accounting agencies, we are not in that category that Chrystia Freeland would have you believe is rich.
They walk the talk in the world of investment, they make their mark.